Hi, and welcome to a new episode of the Luxembourg PE&VC Stories. My guest of the day will be David Schäfer. He's the Managing Director at MPEP. Hi, David.
Hi, my pleasure to be here.
The same on our side. Thanks a lot for joining us, and let's then discover MPEP. What can you tell us about your firm? Who, when, and how did that whole adventure start?
Good. Maybe starting with a brief explanation. MPEP stands for Munich Private Equity Partners. We're an investment boutique specialized on lower mid-market buyout fund investments. And the whole journey started back in 2011. Actually, we started off as the in-house investment advisory of the Munich Private Equity Group. So we have been a subsidiary of them. And for the first few years, we have been their exclusive investment advisor. So we have not been an own AIFM. But in 2014, we made a strategic decision to go beyond the investment advisory service and to start our own fund of fund. So this is also when we opened our office here in Luxembourg and became a fully regulated AIFM. And since then, we have launched now 6 fund of fund programs. And this is how the story started.
Great, very clear. So the strategy now we understood. What can you tell us a bit about your favorite verticals or sectors?
So as I said, for us, we're an investment boutique 100% specialized, meaning we have one product in one asset class. And for us, it's about creating an almost asymmetric risk-reward profile for our clients. What I mean by that is we're investing only in buyout, meaning mature companies, proven business models. We're only investing in the mature markets, North America and Western Europe. Typically, we also invest only in Fund 3 onwards, so proven managers which are established. So that's the conservative part of our strategy. And we're trying to combine conservative investment approach with outperformance potential. And the outperformance potential is coming from, first and foremost, the sector we are focused on, or the segment, lower middle market. Clearly has had its structural advantages. At the lower end, obviously, you pay better entry prices, small, mid-sized companies are less leveraged, and the value creation potential you can have if you come into a company and being the first institutional investor is quite substantial. So these are the things where we see highest value creation potential. This all sounds nice on paper. The challenge is to get access to those fund managers who have been delivering 3-4 times in a row, 3x funds, because those funds are typically very much high in demand. So getting in is really the key challenge. And I think for me, it's also one of the key value add we bring to customers, giving them a fund-of-fund portfolio with very exclusive fund managers in that segment, lower middle market buyout.
Looks like a very robust playbook with all your criteria you mentioned, and also on the due diligence, I assume there you have the right firepower to go through those checks.
Yeah, I mean, we do a lot of qualitative and quantitative analysis. I have to say the most important point for us is the team, clearly, because we have to trust those people. They have to find the deals, they have to execute them. So understanding team dynamics, what's motivating those people, this is very crucial for us. And specifically invest in lower middle market buyout. It's not like if you invest in Apollo where they have 25 partners and one goes, right? For a lower middle market buyout fund, you typically have 2-3 founding guys where you really rely on. So knowing these people and understanding what they do and what's driving them is very important for us.
You mentioned before Munich and also the Luxembourgish AIFM. Could you deep dive a little bit into your setup with a bit more details?
Sure. What we have is we have the fully regulated AIFM here in Luxembourg, and this is already since 2014. So for the beginning, we said we will build up an office, hire people, and have real substance. And this team has grown to, we have now 9 people here on the ground full time, and we're expanding. In total, we're 24 people at the moment. So Munich is the second office. This is where the investment advisor sits. So this is the combination, the investment advisor in Munich and the AIFM here in Luxembourg. And maybe worth to mention that on the product side, I forgot to mention, what we offer is always 2 legally separated programs. We're investing in North America and in Europe, but with us, for example, for the moment, we're now in the market with MPEP 6, but we call it's the MPEP 6 program. It has an MPEP 6 European and an MPEP 6 North American program. So with that 2 legally separated vehicles, investors can choose how to mix their allocation. So they can do 50-50 or just US or just Europe. So this is giving flexibility to investors with regard to a regional sector allocation.
Also quite clever solution also to, let's say, show more flexibility and build that in your different proposals. Concerning the 3 last years, I mean, the industry grew so much over the last decades. Were those a little bit more complicated on your side? What happened? Can you share with us?
Yeah, I mean, the last 3-4 years has been generally very complicated. It all started with COVID and all the geopolitical things, inflation. I mean, this was impacting almost every asset classes. So we have increased labor cost, higher input costs for everything. So there was margin pressure, and the deal activity was specifically something people were very worried about. The last 2 years, I think the biggest concern or problem I heard from investors is a lack of exits, which was a lack of new capital to reinvest then. So, this has affected also private equity, obviously. And in our specific case, being 100% focused on lower middle market, I have to say the impacts were probably less compared to the large and mega buyout market. This is where the structural advantages of the lower end really comes into play. And the M&A activity was still relatively robust on our side. So we've seen that in our own portfolio, investment activity, as well as exit activity. Actually, for our own portfolio stayed actually the same. The number of exits we had in the last year was the same than the year before. And before it was just growing year by year. The performance, the money multiples has come a little bit, but it's still on a very high level. And so far we're super happy. We have across our programs now 121 full realizations that generated an average of 3.6 times money multiple, so which is way above market standard, I would say. And this is based on the quality portfolio of the underlying funds, obviously.
Again, makes really sense, and good to hear that you kind of went through this period in a positive manner, and then that you had the right responses also for the market. We discussed also a lot ESG or sustainable finance. What's your position on that?
Yeah, I mean, 10 years ago, ESG was probably not such a big topic. If you go to any annual gatherings, this has changed over the last 5 years, and has been a topic for us already for quite a while. We started actually in 2014 to use the UNPRI principles, and back then we embedded this also into our due diligence processes already, but we have not been an ESG forefront runner, but we have been established our MPEP Fund 4, 5 and now 6 as an Article 8. This was a bigger project we did with the ESG practice from PwC. And yeah, this is our setup as an Article 8 fund.
Despite the revamp right now, which could make sense in order to simplify and be more pragmatic, it's good that people continue the efforts. And we also saw and discussed in the past with the non-financial value creation which could exist. So that's also an interesting angle. Since you're using Luxembourg, what's a bit your take on our country, competitiveness, things to change? How happy are you?
Look, for me, Luxembourg has clearly developed into the European hub for the fund industry. And we have an international investor base, and the experience we have with legal structure here works quite well across the whole European region, I have to say. So from that perspective, we are fine. And obviously, year by year, we're getting more regulatory and administration stuff, but that's what we all have to deal with. But generally, we are happy that we made a decision 10 years ago to open the AIFM here in Luxembourg.
Excellent. On our side, that's really what we also would like to advocate. If there are things where we could be helpful in the future and keep that kind of as interesting for you and your investors, then let's do that together.
Yes.
Good. And now a little bit more on the personal questions. Let's move on to those. First, what did you study and how did you enter the field?
I started 25 years ago, initially as a banker in Frankfurt with the Hilaba State Bank. But this was not related to private equity back then. I studied then economics with a focus on finance and marketing. And at the end of the study, I did my diploma thesis about private equity. I did this for a German insurance company, and this was really where I got hooked onto that topic. So, and I started to work for the insurance company, and then I joined 16 years ago our group. And yeah, since day one, this topic really is fascinating for me, and every year I still continue learning. So. And I can't believe that I will do anything else in my life. So this is really what I really love and what I have a passion for.
Wonderful. That's absolutely the shared experience we would like also to have, because I mean, once you have tasted that, when you get that virus, you'd also like to continue and then ask yourself, why did I not hear about it before? But in your case, you're really pioneer also with that thesis work. That's really great. Any suggestions or advice you would like to share with the next generation?
When they start with private equity, I mean, I still remember one of the books which really was also a very good basic learning for me was Beyond the J Curve and stuff like that. So those kind of things I can only recommend for people really starting to look at PE. And beside of all the technical things you can learn about private equity, also don't forget the interpersonal skills. So soft skills play also such an important role. So we have to do sales every day, right?
So internal and external, I assume.
External and external, absolutely. It's even for our investment activity. I mean, we're fighting to get into funds which had, I don't know, 3-4 fund generations where they delivered 3x gross, and they have so many investors standing in front of their door, and we have to find our angle. Why should they choose us? So this is also kind of sale we have to do there. So, but how to deal with people and understanding human being is something I would also put some time on it.
Yeah, excellent situation to be in, and then also I assume that you met many interesting people, and also it's quite an approachable sector.
Yeah, definitely. I mean, meeting so many fund managers over the years was something that inspired me. I would not say there was someone specifically I would pinpoint to, but what inspired me again and again is meeting different fund managers and understanding their operating models and what they do in their strategy, and dealing with people who are really smart guys, but still very down to earth in most cases. So, and this was inspiring me along the way, but there was nobody specifically who I would pinpoint to.
You mentioned before Beyond the J Curve as a book. Would you have other references you would like to share, be it podcasts, other books?
Maybe for the interpersonal skills, Dale Carnegie is somebody like How to Win Friends and stuff like that. These are books which I think has a lot of elements which are useful for the private and for business life.
David, thanks a lot for your presence and engagement.
My pleasure.
And see you very soon.
Thank you very much.